From crisis to crypto. The birth of Bitcoin. The year was 2008. The world was in financial freefall. Banks were collapsing. People were panicking. It felt like the economy was hanging by a thread. Governments were scrambling to find solutions. Amidst this chaos, a mysterious figure, Satoshi Nakamoto, unleashed Bitcoin. A revolutionary concept. Bitcoin wasn't just another currency. It was a new way of thinking about money. A decentralized digital currency, operating outside the control of governments and banks. It promised a new era of financial freedom and transparency. Like a life raft as the ship was capsizing. A beacon of hope. This life raft ran on blockchain, the backbone of Bitcoin. Blockchain is a public ledger, making Bitcoin secure and transparent. Imagine a giant digital spreadsheet duplicated across thousands of computers. Every Bitcoin transaction is recorded, visible to everyone on the network. It's transparent, secure, and practically impossible to tamper with. Like the world's most powerful Google Doc, tracking billions in transactions. Before we dive deep, please hit subscribe and like this video. It is free to you, but tremendously helps the channel grow. True believers, early adopters, and the rise of Bitcoin. At first, Bitcoin was the domain of tech enthusiasts and cypherpunks. These pioneers saw beyond the digital code and recognized the revolutionary potential of a decentralized currency. They saw its potential to disrupt the established financial order. To them, Bitcoin wasn't just a new form of money. It was a movement, a rebellion against centralized control. They mined Bitcoin on clunky computers, traded it in online forums, and even bought pizza with it. These were the true believers, willing to take risks for a vision they believed in. Remember that guy who bought a pizza with Bitcoin that's now worth millions? That story has become legendary. It was a time of great uncertainty and even greater opportunity, where fortunes could be made or lost in the blink of an eye. As the word spread and more people jumped down the crypto rabbit hole, the value of Bitcoin began to rise. Slowly at first, then all of a sudden, it was like watching a rocket launch. But instead of going to space, it was going to the moon. Everyone loves a good underdog story, and Bitcoin was quickly becoming the little engine that could disrupting the financial world one block at a time. But this was just the beginning. The early adopters had set the stage, but the real drama was yet to unfold. The blockchain bottleneck. Technical hurdles and limitations. But like any good magic trick, Bitcoin had its secrets. And those secrets were sometimes limitations. For starters, Bitcoin transactions are notoriously slow. Imagine thousands of people trying to update a giant spreadsheet at the same time. It's not pretty. Then there's the issue of scalability. Bitcoin's blockchain can only handle a limited number of transactions per second. Compare that to Visa, which can process thousands of transactions in the same time frame. From currency to commodity. The evolving identity of Bitcoin. As Bitcoin matured, its purpose began to shift. What started as a revolutionary idea began to evolve in unexpected ways. Initially conceived as a peer-to-peer electronic cash system, it aimed to bypass traditional financial institutions. But its volatile price and technical limitations made it less practical for everyday transactions. Imagine trying to buy a cup of coffee with Bitcoin and watching the price fluctuate by 10%. Not ideal. Instead, Bitcoin began to be seen as a store of value, like digital gold. Investors flocked to it, drawn by its limited supply and decentralized nature. It became a hedge against inflation, a safe haven from economic uncertainty. Or at least, that's what people convinced themselves it was. This shift in identity created a new set of challenges. The market dynamics changed, and new complexities emerged. Bitcoin's value became increasingly speculative, driven by market sentiment and the whims of whales. It was like the Wild West out there, with online forums and tweets moving markets. Buckle up because things were about to get even wilder. The journey of Bitcoin was far from over. Bitcoin's journey from a niche digital currency to a globally recognized asset has had profound implications for global finance. Its impact, both positive and negative, cannot be overstated. On the positive side, Bitcoin has democratized access to financial systems. In regions where banking infrastructure is lacking, or where hyperinflation erodes savings, Bitcoin offers a lifeline. It provides a means for people to store and transfer value without relying on traditional banks. This has empowered individuals in developing countries, giving them a form of financial sovereignty that was previously out of reach. However, the rise of Bitcoin has also brought significant challenges. Its volatile nature makes it a risky investment. Additionally, Bitcoin's environmental impact has come under scrutiny. The energy-intensive process of mining Bitcoin consumes vast amounts of electricity, often generated from fossil fuels. This has led to calls for greater regulation and oversight, which could stifle some of the freedoms that Bitcoin was designed to provide. In summary, Bitcoin's impact on global finance is a double-edged sword. As Bitcoin continues to evolve, its role in the global financial system will undoubtedly become even more complex and significant. As Bitcoin and other cryptocurrencies rise in prominence, they find themselves at the crossroads of innovation and regulation. Governments and financial institutions worldwide are grappling with how to integrate these digital assets into existing legal frameworks. This has led to a patchwork of regulations that vary significantly from one jurisdiction to another, creating a complex landscape for users and businesses alike. In some countries, Bitcoin is embraced as a legitimate form of payment and investment. These nations have implemented clear regulatory guidelines, providing a sense of security and stability. For instance, Japan recognizes Bitcoin as legal tender, allowing its citizens to use it for everyday transactions. Similarly, countries like Switzerland and Singapore have established crypto-friendly policies, fostering innovation and attracting blockchain startups. However, not all nations share this enthusiasm. In contrast, countries like China have taken a hard stance against cryptocurrencies, banning trading and mining activities. This crackdown aims to protect financial stability and prevent illicit activities, but it also stifles innovation and drives crypto businesses to more welcoming jurisdictions. The United States presents a particularly interesting case. While some states have enacted favorable laws, the federal government remains cautious. Regulatory bodies, like the Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC, have been scrutinizing the market, aiming to protect investors while fostering innovation. This has led to debates over whether cryptocurrencies should be classified as securities, commodities, or a new asset class entirely. The regulatory uncertainty extends to tax implications. Different countries have varied approaches to taxing cryptocurrency transactions, creating confusion for users. Some treat cryptocurrencies as property, subjecting them to capital gains tax, while others view them as currency, imposing income tax on gains. This inconsistency complicates tax reporting and compliance for individuals and businesses operating in the crypto space. Moreover, the rise of decentralized finance, DeFi platforms, has introduced new regulatory challenges. These platforms operate without intermediaries, offering financial services like lending, borrowing, and trading directly on the blockchain. While this promotes financial inclusion and innovation, it also raises concerns about consumer protection, money laundering, and fraud. In response to these challenges, international organizations like the Financial Action Task Force, FATF, are working to establish global standards for cryptocurrency regulation. These efforts aim to create a cohesive framework that balances innovation with security, ensuring that cryptocurrencies can thrive while minimizing risks. As Bitcoin and other cryptocurrencies continue to evolve, their regulatory landscape will remain a critical factor in shaping their future. The balance between fostering innovation and ensuring security will be key to unlocking the full potential of these digital assets. Only time will tell how the world navigates these regulatory waters. But one thing is certain, the journey is far from over. As Bitcoin continues to grow in popularity, another pressing issue has come to the forefront: its environmental impact. Bitcoin mining, the process by which new Bitcoins are created and transactions are verified, requires a significant amount of computational power. This, in turn, consumes vast amounts of electricity, raising concerns about its sustainability. The energy consumption of Bitcoin mining is staggering. Estimates suggest that the Bitcoin network uses more electricity annually than some entire countries. This high energy demand is primarily driven by the proof-of-work (POW) consensus mechanism, which relies on miners solving complex mathematical problems to add new blocks to the blockchain. These computations require specialized hardware and substantial electricity, often sourced from non-renewable energy. This environmental footprint has sparked a global debate, with critics arguing that Bitcoin's benefits do not justify its ecological cost. However, the crypto community is not turning a blind eye to these concerns. Several solutions are being explored to mitigate Bitcoin's environmental impact. One promising approach is the transition to renewable energy sources. Some mining operations are already harnessing the power of wind, solar, and hydroelectric energy to fuel their activities. By shifting to sustainable energy, the carbon footprint of Bitcoin mining can be significantly reduced. Another potential solution lies in improving mining efficiency. Advances in hardware technology, such as the development of more energy-efficient mining rigs, can help reduce the electricity required for mining. Additionally, optimizing mining software and algorithms can further enhance efficiency, minimizing unnecessary energy expenditure. Beyond these technical solutions, there is also a growing interest in alternative consensus mechanisms. For instance, proof of stake, POS, is a consensus algorithm that requires validators to hold and stake a certain amount of cryptocurrency rather than solving complex puzzles. POS consumes far less energy than POW, making it a more sustainable option. Moreover, some innovative projects are exploring carbon offset initiatives. By investing in environmental projects that reduce or capture carbon emissions, Bitcoin miners can compensate for their energy consumption. This approach aligns with the broader movement towards corporate social responsibility and environmental stewardship. In conclusion, while the environmental impact of Bitcoin mining is a significant challenge, it is not insurmountable. Through a combination of renewable energy adoption, technological advancements, alternative consensus mechanisms, and carbon offset initiatives, the crypto community can work towards a more sustainable future. As Bitcoin and other cryptocurrencies continue to evolve, addressing their environmental footprint will be crucial in ensuring their long-term viability and acceptance. The screen fades to black, with a final message appearing. The future of Bitcoin lies not only in its technological advancements, but also in its ability to adapt to the world's environmental needs. Together, we can pave the way for a sustainable digital economy. As the world continues to grapple with the complexities of Bitcoin's environmental impact, the future of Bitcoin and other cryptocurrencies is a topic of immense interest and speculation. What lies ahead for this revolutionary digital currency? One of the most anticipated advancements is the integration of Bitcoin with more scalable and efficient technologies. Layer 2 solutions like the Lightning Network promise to enhance Bitcoin's transaction speed and reduce fees. By enabling off-chain transactions, these solutions can alleviate the scalability issues that have plagued Bitcoin for years. Additionally, the rise of decentralized finance, or DeFi, is set to revolutionize the way we interact with money. DeFi platforms leverage blockchain technology to offer financial services without intermediaries, providing users with greater control over their assets. Bitcoin's integration into the DeFi ecosystem could unlock new opportunities for lending, borrowing, and earning interest, further cementing its role in the global economy. The regulatory landscape will also play a crucial role in shaping the future of Bitcoin. Governments around the world are increasingly recognizing the need for clear and balanced regulations. While some countries have embraced Bitcoin, others remain cautious, citing concerns over security, fraud, and money laundering. The development of comprehensive regulatory frameworks will be essential in fostering innovation while protecting consumers and maintaining market integrity. Moreover, the adoption of Bitcoin as a legitimate form of payment continues to grow. Major corporations, from tech giants to financial institutions, are beginning to accept Bitcoin for goods and services. This mainstream acceptance not only validates Bitcoin's utility, but also paves the way for broader adoption in everyday transactions. The potential of Bitcoin extends beyond financial transactions. Blockchain technology, the underlying framework of Bitcoin, is being explored for various applications, including supply chain management, voting systems, and digital identity verification. These innovations have the potential to transform industries and enhance transparency, security, and efficiency. However, the future of Bitcoin is not without its challenges. Market volatility remains a significant concern, with Bitcoin's value subject to dramatic fluctuations. This volatility can be a double-edged sword, attracting speculative investment, but also deterring widespread adoption. Stability and predictability will be key factors in Bitcoin's journey towards becoming a reliable store of value. In conclusion, the future of Bitcoin and cryptocurrencies is filled with promise and potential. Technological advancements, regulatory developments, and mainstream adoption will shape the trajectory of this digital revolution. As we look ahead, it is clear that Bitcoin's journey is far from over. With continued innovation and collaboration, Bitcoin can overcome its challenges and solidify its place in the global financial landscape. As we've journeyed through the history and evolution of Bitcoin, we've seen its humble beginnings and the challenges it faced, and the incredible impact it has had globally. Let's recap the key points discussed in this video. First, we explored the birth of Bitcoin, a revolutionary concept introduced by the mysterious Satoshi Nakamoto. We then delved into the early adopters who saw the potential of Bitcoin, driving its initial rise. Technical hurdles like scalability and transaction speed were significant challenges, but solutions like the Lightning Network emerged. Bitcoin transitioned from a niche interest to a mainstream financial asset, attracting investors and major corporations. We discussed the global impact of Bitcoin, highlighting its role in financial inclusion and cross-border transactions. And as a hedge against inflation, navigating regulatory waters remains crucial, with governments worldwide grappling with how to regulate cryptocurrencies. The environmental impact of Bitcoin mining has raised important questions about sustainability. Looking to the future, advancements in Bitcoin and cryptocurrencies hold promising developments. In conclusion, Bitcoin's journey is a testament to the power of innovation and the potential to disrupt traditional financial systems. While challenges remain, the continuous evolution of technology, regulation, and mainstream acceptance will shape Bitcoin's trajectory. As we move forward, one thing is clear. Bitcoin is here to stay, and its story is far from over. Thank you for joining us on this exploration of Bitcoin's past, present, and future. Stay tuned for more insights into the world of cryptocurrencies and digital finance.